victorious. We take what we want, the ball warriors, so glorious, victorious. We take what we want, the ball warriors. If you fall, get up and try it again. Don't stop, don't quit. Get up and try it again. Don't stop, don't get up and try it again. If you fall, get up and try it again. Hey, what's up, people? Live on this Thursday night. It's your boy, Mr. Trader out here, doing a surprise podcast. You know, that's some new theme music. Joel Santana, Second Coming. You know, it's an old song, like 15 years old, but that's good theme music right there, people. If you fall, get up and try it again. Don't stop, don't quit. Get up and try it again. All right, so what we talking about here? We talking about Forex, and we talking about crypto. You know, because being that crypto is on a run, you know, Forex is going to be connected because it's the foreign exchange, obviously. If more people go to crypto, other currencies are going to start to fall. You know, they're going to lose their value. So, on that note, we want to know that for Forex crypto is measured how Forex is measured, and that's by the pip. All right, so those who don't know what the pip is, I got my platform up. I talk about it all the time, Prime XBT. So let me go to my platform. Yeah. All right. Screen share the platform. Okay. Now the best thing about this platform is it's an exchange and a wallet. See up here, this is what I'm trading right now in this trade, $115. But if you go to my, well, I don't see my account. It's not that important. But if you go to the account balance and stuff, it's like a wallet. So you can move like this is like you can move it from your wallet where it's active, where it's just sitting, and move it over to the exchange where you can actively trade it. And as you see here, these are all currency pairs. Now, this, all right, I'm glad it came like this. That's why I use this example. Because now they're starting to put crypto on Forex exchanges because crypto is a very liquid market like Forex is. So as you see here, this is XRP and Bitcoin. That's actually two cryptocurrencies, but they're being presented as a Forex pair. That's the base currency. That's the quote currency. You remember Forex is two currencies. You're buying one and you're selling the other, or you're selling one and you're buying the other. It's never just you're just not buying one. You're dealing with two. It's always with Forex. So in this case, even though these are crypto coins, they're presented like a Forex pair. So they're going to be, you know, move like Forex. So again, XRP, that is the base currency. So that's for any currency, any. All right. So this is a US dollar. I forget what that is. ZAR. Swiss franc, USD. See, that's the Swiss franc. That's the Canadian dollar. So let's do one with people more familiar with the currency. So the US dollar, that is the base currency. The Swiss franc is the quote. So this is going to mean that one Swiss franc is such and such dollar. I'm sorry. It's mean that $1 is such and such franc. Right here, the Canadian dollar, the US dollar. So 1.3 Canadian dollars equals one US dollar. So that's how you do the base currency and the quote currency in Forex. So when you move it to a crypto pair, it's the same thing. It's basically saying that point all that 0.00248 of Ripple equals it's in one Bitcoin. That much Ripple is the base and that's the quote. Now, we talk about the bid and the ask. Now, okay, so with this, people always ask, how does the brokerage get paid? You know, with the commission-free trades, because back in the day, commissions is how they got paid. Well, it's something called a spread. If you look at the bid price and the ask price, it's never going to be the same. See, here is only one pip, actually. That's only one pip. Well, it keeps jumping, but right here, yeah, you go to 6. But what it is that's the spread. That's how the brokerage gets paid. Whatever the difference between that, like here is 2 pips, and here is 5. So if you were to click bought or sell, whatever side of the trade that you did, you would have been on the minus end for however long it took for the trade to move in the way you wanted to move. Say it's in an uptrend, and you're going to buy in an uptrend. You're still going to be in the negative when you first make a trade on Forex because you have to pay the spread. That's just how it goes in Forex. You gotta pay the spread. That's how the brokerage get paid. And that is their commission. So when they say commission-free trading, yeah, it's not commission per se,
but it's not free trading. You're paying the spread. So I think when people start with Forex, that's how they get confused. They're like, wow, why am I in the negative and I bought and it's going up? That's because you paid the spread, my friend. All right. So now, like I say, Prime XBT, that's what I like. As you see, all these currency pairs. Then you got actual Forex. I'm sorry, you got cryptocurrency pairs. Then you got actual Forex currency pairs. XAU, you got gold. I think XAG is silver. Don't quote me on those exact ones. You might want to look that up. But I think XAU is gold and XAG is silver. Then listen, we got indices, like we talked about the UK 100. That's the top 100 stocks by capitalization on the UK stock exchange. The SP 500. You know, it's a lot. You got the Japanese exchanges, the Nasdaq, natural gas. Like Prime XBT is a really good exchange. Look how many assets it is. It's a lot of now. All right, so this one is highlighted because I want you guys to see this. Bitcoin US dollar. So obviously, one Bitcoin is $11,854. See, as you see here, the the spread on this one is the exact same because it is all right. So one thing about the spread, if it's a very liquid asset, the spread is going to be really small because it's liquidity. I tell you people all the time, liquidity is a very important word in the financial field. Liquidity. So you see here on the Bitcoin US dollar, the spread, and as I say that, of course, it goes big. It just jumped. As yeah, the spread is normally all right. So on a regular forex exchange, the world's most liquid asset is the euro dollar, EUR/USD. That's the world's two most biggest account. Well, all right. So the eurozone isn't bigger than the Chinese economy, but it's a free economy. So the world's two biggest free economies, eurozone and US and America. As you see here, the spread on this is what 0.5 compared to everything else. That's the smallest spread you're ever going to see in forex. Is always the euro dollar, and maybe the dollar yen because that's United States and Japan. That is the first and the third biggest economy. So, but you see here, Bitcoin and US dollar. See, I think because Bitcoin, this is a new concept. This Bitcoin forex exchange. So this spread is actually there's no spread. The bid price and the ask price is the exactly same price, and I've never seen that. Like I say, like this Bitcoin, this cryptocurrency is still new. I've never seen where there's no spread at all. That's why I'm like, wow, I've never seen that. But as we see here, these are all other coins: EOS, Ethereum. So as you see, Ethereum is $416. What I wanted to say is, so say you don't have the money to buy a full Bitcoin, you just click buy. You don't have to buy. And as I say, your Prime XBT, Bitcoin is the default currency. As you see, the balance up here, everything here is measured in Bitcoin. They put it in dollars. Well, I actually put dollars so I can understand it, but that's how it's measured in Bitcoin. So in an environment like this, where it's a crypto bull run, Bitcoin, this is like investing in Bitcoin because you're on an exchange where Bitcoin is the currency it's the default currency, so everything's gonna be quoted in Bitcoin. So if you don't have the money to really get into Bitcoin like you want to, just get on Prime XBT. And the best thing about this exchange is when Bitcoin's going up, you make a positive trade. It's like your money's being skyrocketed up because the price of Bitcoin is going up. So that's going to naturally raise your balance. But then you did a positive trade, which is going to raise your balance. So you get like a two-fisted approach to get money. So again, I'm not a financial advisor. So you might want to, I don't know, call your financial advisor and ask about Prime XBT. I'm just telling you from my experiences. This is a real yeah, so yeah, as I say, you're able to also move your money. Like, all right, so it's a wallet on the exchange. So like times when I don't trade, I just take all my money out my wallet, put it on the exchange, from the exchange and put it in the wallet. And then when I want to trade, I just pull 100 out of time, 200 out of time. See, this I'm only doing an example. So it was a 115. So, but yeah, and that's the best thing about this. It's like a wallet and an exchange, both in one. And whereas Binance, Bittrex, those are exchanges and wallets, but they deal strictly with crypto. This exchange slash wallet, as you see, deals with Forex, crude oil, Dow Jones, Bitcoin, all type of different currency pairs, like 40 currency pairs. Then SP 500. natural gas, NASDAQ. As you see, this is a really good exchange. The only thing that's missing is singular stocks. That would just make this the best thing ever. But I guess you can't. Oh, I gotta be happy. Look at me complaining. Yeah, so all right. So I always talk about technical indicators. All right, so you click on this, you can tell what type of you want your measurements to be in. Like I say, candlesticks. That's the basis of technical indicator. I'm sorry, technical analysis. Japanese candlesticks, as you see here. I mean, all right. So when you just look at the candlesticks, you would just start seeing pattern recognition. Now, I tell people all the time that's what technical analysis is: pattern recognition. It's not really reinventing the wheel, because, like I say, these same candlesticks and patterns that I'm looking at in 2020, somebody was looking at in 1980. This same exact chart. I mean, it wasn't Bitcoin, obviously, because Bitcoin wasn't out back then, but it could have been JC Penney stock. But the point I'm making is, like, it's not really nothing you're not going to see. So when people always ask me how to trade, I tell them practice. Practice makes perfect. That's how you're going to learn how to trade. I could talk to them blue in the face about buy this when this level, or sell this at this level, or get these indicators and do those indicators. But until you physically get in the trading environment, and that's why I say you could trade Forex at night, because Forex, well, actually, Prime XBT, this is a 24/7 exchange, okay? This is a Bitcoin, it's a crypto exchange, so this is literally open 7 days a week. So you want to practice, if you want to learn how to trade and not in the hectic hours, you can trade at night. The only thing bad about the nighttime trading is you need to, all right, so with things like crypto and Forex, see, stocks is from 9 to 4. I'm sorry, 9:30 to 4. That's it. See, being that Forex and crypto is they worldwide markets, you gotta know the time frames when you trade. See, people want to trade the US dollar and the Japanese yen. That's good. But you got to know the time frame to trade it. You want to trade it during the Asian markets, when the Asian market is open, which is like now, I think, because they're like 12 hours ahead of us. So I think 8 a.m. here is 8 a.m. in Japan and Tokyo and Shanghai, China, and Hong Kong and all those areas. That's when you want to go for the the Japanese yen, or the Aussie, the Australian dollar, because that's in that, even though it's not in Asia, but it's in the same time frame. The New Zealand dollar, all of that, in that area. So you gotta know the time frame when you trade in Forex. People want to know about Forex, and they ask me all the time, "Is Forex a scam?" I know Forex is the world's most lucrative market. It's the world's biggest market. It's like $5.3 trillion in Forex. See, but when you guys get in those pyramid scams, I'm sorry, I don't want to call them scams, but they are pyramids, because there's one level to the next level to the next level to the top. Now, they're not always scams. That gives it a bad connotation when you say pyramid scam. But when you get things like that, people think you're being scammed because you don't see the profit as you would see by yourself. And I'm like, why would you join a team? I mean, if you're learning from the team, it's good. But I know people that's in all kind of like things on Forex, and they all got bad war stories. And it's like, teach yourself how to trade. And it's like, it's not, I keep saying people, it's so easy. So now as we, all right, I get way off topic. I just be all around in a circle. Gotta bear with me, people. All right, so these are the different the chart frames: a minute, 5 minute, 15 minute, 30 minutes, so on and so forth. Now, as I say multiple times in Forex, this is the best time to use multiple chart frame analysis. Meaning, all right, so that's the weekly. So this is 52 weeks. Every candle you see here is 1 week. So that goes all the way back. Just imagine the date. That is 2 years. That's 3 years back. That is 9/25/17. That is a long time for to study the price. Bitcoin, as you see, that was an all-time high up here. Bitcoin's been coming, fell down. Now, this seemed to be a line of resistance. As we see, what's resistance? Where a price hits a certain point and it keeps getting knocked down. So up in this area would be resistance. Now, like I say, people, knowing basic technical analysis, just knowing that this is a line of resistance, and you see where the price is straddling, you can go short right here. This, I mean, that's just how I would play it, just based off of what I see. If you just said I would go short without even. But of course, there's more. So we take the longer term. That was a week. Then I come down. I do the daily. which is this is 52 days back. And as you see here, the chart completely flipped from the weekly frame to the daily frame. You don't even see the big all-time high. It's more been in a static, just flat line, which is true. That's the price of Bitcoin for the last what 320. This is 50 was about 60 days. It's pretty much been in the I mean, it's been going up. But see, when they say the price is volatile, it's not as volatile as they make it seem. Because if you look, everything is continuously going up. It's not really ricocheting like that, how they make it seem. But it is volatile compared to other securities. But look, that's almost like a straight line. And then it jumped right here. July, hey, that's my birthday, July 26th, yeah, to the 27th. And haven't been the same since. Day I turned 39. All right, so that was then we come down to the small frame. Now watch it be completely different. Exactly. And these are flat lines. So I gotta open this up. But the point I'm trying to make is that with forex and things like that, you want to take the multiple time frame analysis. So you can see now this is Bitcoin. I mean, I actually do this for the euro dollar. Well, let me get on the euro. Well, it's the same concept. I didn't realize I was on Bitcoin actually. That's why I look so crazy. I normally be on euro dollar. And when you do my trades like that, see, this is more of a regular chart. It's not supposed to look. You know, this is pretty much normal. Those Bitcoin swings be kind of crazy compared to, like I say, normal assets. Yeah, see, this is more of a normal chart. But the thing I want to make is I brought this up again. I'll be all over the place. This multiple time frame analysis. See, once you get a long term view of something, then you could start to get a better view. So you got long term, you got the bird's eye view, and then you got the I'm sorry. So the longer term view, that's the bird's eye view. That's like when you look at the top, you're looking at everything around you. So you can see the view. I'm on the wrong screen. What just happened? Okay. Then in the shorter term view, you come on, that's when you focus on to the exact time frame where you want to trade. Well, see me, I day trade forex. So I stay on the 5 minute to the 15-minute charts when I make my trades. Like I say, I come out to the daily, as you see here, the euro dollar. See here, definition of a definite uptrend. But as you see, it's not a line up, it's a up, retrace, up, it kind of retrace down, what up, stop, trace. That's how the trends go. That's how they go. Now, as you see, those are the most important prices. Open, high, low, close. OHLC. That and the volume. As you see, volume, that's what I have on the chart. Because volume is the most important indicator, in my opinion. Because when you see the volume spike, that means people are about to buy. I mean, I was like, people, let's keep it simple. Let's keep everything simple. Why would there be so much volume? Because people are buying. Why isn't there any volume? Because people are selling. Let's just keep it simple. So when you see the volume spike, oh, buy. I just that's a quick. See, the thing with forex, man, it moves super fast. So like four or five pips in an hour. See, 4 or 5 pips. See, on this type of where I have it at now, I have it. These are called micro lots. So 4 or 5 pips is like you see, it's like a penny a pip, I think. But on my other account, on a standard lot where it's $10 a pip, 4 or 5 pips now becomes $40 to $50. And you do that 4 or 5 times in an hour in forex, and then you do that 5 hours. You see why forex becomes very lucrative if you know how to snatch pips. Just grab a quick 4 or 5 here and there. You really know how to make it that hard. All right, so again, in my book I talk about these indicators. I mean, this is my if anyone read the book I wrote, Price Action Trading System, this is the exact style I trade. If you the RSI and the ADX and the volume, those are the 3 indicators in my opinion. There's plenty of more. We got also moving averages. I didn't put them on the chart yet, but moving averages also go on the chart. But as you see, this is my basic trading style. That's the PAT system, price action trading. Just follow the price. Look what the price did. Is it overbought or oversold? Is it trending? As we see here, it's 47. That's a good trend. As you see and look at it, it's trending. When those lines, I mean, look, when they hit the ceiling, that's when it's time to sell. Ceiling there, I'll call it spiked. it's different. I forget the real professional terms because you see I'm self-taught. So, but when it spikes, when it hit this, as you just see, everything here correlates to the above chart. You know, it's like a perfect correlation. Now, of course, it's easy to say this is easily done, hindsight 2020. But I'm here to tell you, I actively trade this and it's like this in real time. You know, that's the thing with these indicators and everything. It's gonna be a lag all the time because you're not there physically as with the person putting the exchange prices down. You know, they have to put the prices in the system and this and that and that and this. So it's not gonna be instantaneously lined up. But it is about five. It's like a 5-10. It just honestly depends, honestly. At the most, a 10-minute lag at the most. But when it lines up, it correlates perfectly. As you see, when the volume spikes, you see the price jump. When the volume goes down, you see the price drop. Like, you know, see, look, every time there's a gap, you see the candlestick. Candlestick is so little, so little, so little. Every time there's a gap. Look, that's because there's no volume. There's no price movement. So those are days where you just don't even either stay out the market or whichever direction it's in, you just stay with that direction because there's no reverse pressure to go against that movement. So if the price is falling, there's no volume, you just sell because there's no buying pressure to go against that movement to push the price back up. And that's pretty much, man, when you guys just trade, you just start seeing this. Like again, it's not rocket science. It's more or less pattern recognition. Now, when you read my book, I talk about candlestick patterns. Like again, me as the trader, I can spot them a mile away. These are all that's a doji, pin bar, like this. Like again, people always ask, man, how do I figure out which way to get in the market? What's the perfect entry exit point? And I tell them all the time, do your technical analysis, look at your candlesticks, use your RSI, use the ADX. So if the ADX, which stands for average directional index, that's how you measure the trend. All right. So it was listen, that's a 664. All right, so you know you're on a strong trend. So without even looking, you can just see direction. That's a buy. Even if I do too much more because it's in a trend. The ADX is at 64. That's a pretty high level. And even though right when I did that, you see where it gapped, there was no pressure for that day. You know, there was really no pressure, but it continued in the direction of the trend it was in, as I said previously. Whatever direction that is already going, you can keep following it. There's no pressure because the pressure always going to be against that direction. So if it's going down, the pressure is going to be up, pushing it up. Likewise, if it's going up, the pressure comes down to push it back down. So again, I would recommend, and the book is free, so don't think I'm trying to get a payment to plug my book. The book is really free, and it's not really, it is free. It's a super free book. But this is the exact way I trade. And I brought this up because I didn't want to think people to think I'm just selling tickets. Like this is the exact way. Look, if you read the book, it says candlesticks, RSI, ADX, and that's the only things I put on my chart. Oh, and moving average. All right, let's go to moving averages. All right, so all right, studies, but they're called indicators. But you know, every brokerage says it differently. This would say studies, obviously, but they're all technical indicators. And as I told you, look how many of them it is. People, you can like shoot yourself in the head if you put too many indicators on your chart. Don't get killed when you trade. Like I'll keep it simple, stupid. That's what it tells the military. Don't get because I'm telling you from experience. When I first started, man, I would have like 100 indicators on my chart. My shit look like a coloring book. I would get confused because I'm like, what am I supposed to do? Do I buy? Do I sell? Do I sell? Do I buy? What's going on? You know, but after time, you start to realize what works, what doesn't work. So yeah, as I was saying though, EMA, that is the exponential moving average. We can put that on the chart. We can throw that on there. All right, and then we go to the SMA, which is the simple moving average. Done. Throw them on the chart. Now, as you see here, the moving averages, that's just what it is. It's a moving average. And the difference is between the EMA and the XN and the SMA is the names. A simple moving average is exactly what it is. It's simple. It's static. It doesn't move. So from day 1 to day 20, is you just do that. It stays the same. Exponential moving average, think of it as a moving average. It's a moving average that moves, which means that day 1 through day 20 is completely different between because it goes to day 1 to day 21. day 2 to day 22. Do you see how like those days it continuously moves? Whereas simple moving average is just day 1 through day 20. I use 20 because 20 is like the default setting, but the most common settings are 20, 50, 100, and 200 for moving averages. Now, basic trading systems for a moving average, if you see, all right, I gotta take one of them off so you can see what I'm saying. Don't buy or sell. All right, but either it doesn't matter. Just one of them off the chart. All right. So if you see that the price is above the moving average, that's a buy sign all day long. That's a buy. Likewise, if the price is below the moving averages and the moving average is resistance to the price, that's a sell. That's just simple. That's simple. Trading 101, just without even like going to too much in depth. Like that's so many trading styles of forex because forex has maximum liquidity, so it's so many opportunities to slide in and out. It's literally you can just do the RSI trade. RSI, as I got on my chart, it's the levels 80 and 20, overbought, oversold. Obviously, if something is overbought, there's too many people are buying it, and you sell it. If something's oversold, too many people selling it, you buy it. So you just play the RSI game. If it moves over to the 80, which is overbought, you just I'm sorry, oversold. That means you buy it. If it moves into the overbought territory, then you sell it. That's things like that. You know, when you learn to use your indicators, let me take them off this chart to make the chart naked. Oh, not that. Oh yeah, it doesn't matter. It was underneath though. When you make the chart naked again, yeah. So when you make it naked, well, see that I'm sorry, you have underlays and overlays. I like the underlays because they really don't mess with the chart. They just don't. It's the RSI and the ADX. SMA, AMA, Bollinger Bands, those are all overlays where they overlay on the chart. And they're good, but they're kind of getting away, and I have bad eyes, so I really don't like it like that. But yeah, but the point I'm trying to make people is a lot of people ask me in all the groups I'm in, they all the time they ask, what is the perfect entry exit point? When do you know when to buy? When do you know to sell? Do you know about this? And my response to the day I die is going to be technical analysis. On my gravestone, I'm going to say, Mr. Trader died. Last words, do your technical analysis. You know what I mean? Then they're going to drop my casket. But yeah, man, that's just what you need to do, folks. You know, and I say all the time, basic trading systems, man. Knowing basic support, resistance, and candlesticks. That is an easy trading system right there. Just knowing this. See, as you see here, that invisible line where the price seems to stop at, that's known as resistance. Now you would go there, and once that resistance is breached, it becomes support. But this could be a false breakout. We really don't know because it breached it, but then look, it dipping right underneath the line. But let's see on the next candlestick. This is the daily candlestick, so tomorrow, I'll wait till Monday probably. You know, but yeah, folks, let me come off the screen share. I didn't want to kill y'all with the charts all night long. But that's how it is with forex. Yeah, yeah, Floyd Prime XPT. My bad, I couldn't see because I was on the screen share, so I'm just seeing your question. But yeah, that's what it is with the Prime XPT, man. You wanna there's so many markets, bro, and it's like maximum liquidity, folks. That's what I cannot stress. Liquidity, liquidity, liquidity. Bitcoin and crypto is 24/7. You know, you can trade literally. After I get done with this live, I'm probably gonna do some trades. Not probably, I am gonna do some trades. You know, so I brought that up so you can actually see the exchange. Now I want anyone out there that want to trade with me, go to any forex exchange and make a practice account. And then you come on here with me and we could trade together, or anyone else out there that want to learn. Because like I said, you can't trade stocks during the day, but you could book is up. Yeah, Floyd, it's the same book I've been talking about since we met. Same book that I gave you, as a matter of fact. Everybody I gave a book. But um hold on. But yeah, so you can't really trade stocks, but not really. But you cannot trade stocks only between 9:30 to 4. Whereas Forex is 24/5. whereas crypto is 24/7. So as you see, it's more opportunities to make your money, more opportunities to lose your money. Also, you can go both ways. But thing with that is though, that's when you start using your indicators, using your candlesticks, moving averages. I use RSI indicators, ADX average. I mean the trend, like I told you, like in the book, like I don't want to talk about it too much, but you know what I'm saying. So like just read the book. Like all the groups I'm in, I say yo, and I'm not plugging it because it's free. I don't get nothing from this. It's free, but it's just I lay it out step by step. The ADX indicators how you determine if it's a trending environment or a range trading environment. Because you never want to go against the trend. That's like a beginning. That's trading. That's the first thing they teach you. The trend is your friend, or don't swim against the stream, or all type of little quotes. Don't try to catch a falling knife. Don't try to swim backwards through traffic or run through traffic. That's basically saying don't go against the trend because you're gonna lose your money. That's basically what that's saying. But those all kind of little quotes and stuff like that. So when you learn that, the ADX indicator, 25 is the magic number. Over to, let's say 30. 30 is the magic number. Over 30, we're trending. Under 30, we're arranging. That means we're going to be whip showing most likely. The lower it is, the more of a range we're going to be in. But the best thing about a range environment is defined tops and bottoms, which means you know the top, you know the bottom. Once you know the top and the bottom, that's your entry exit points because you know the support and resistance. Like me, I prefer a ranging environment over the trending environment. Even though a trend can go pretty much limitless in theory, you can go up forever. But the thing with a range, like I say again, once you know where it begins and ends, it becomes child's play taking candy from a baby. So I tell people all the time, you want to know, how do I know where to buy, how to sell? Basic technical analysis. You want to do support and resistance. All right. Oh, I have a chart. Damn, I don't feel like getting it. I do that like I'll load it on my page and I'll send it out on my mail list. If you're on the TRADEORDIE mail list, I will send you my personal trading chart that I actually use. And if you're not on the mail list, leave some comment, put your email in the comment. You know, Floyd, I'm glad you're there, Floyd Harris. You don't come up. Every time I send my mail list out, your your name always comes back as that's not an email address. So I don't know. Your email address doesn't work. But yeah, I send you my personal chart that I use. And these charts, it's not nothing special. It's just I have my support and resistance lined up for the month, for the week, for the year, at my pivot points. So once you do this once, and I will recommend you do this like on a Saturday or Sunday. Once you like line that up, you don't have to do that ever again until it breaches that. Which you're at an all-time high because those are the yearly highs or the yearly lows or the pivot points. Those are important points on the chart. Now, when you stare at the chart and you see, wow, why does it stop at that exact point? That's because that was a pivot point or a SMA, EMA, met. Or it's called confluence. Now, a confluence is when you have a bunch of technical indicators meeting in one spot. That's what confluence is. Think of the city of Pittsburgh, the Three River City, three separate rivers meet in one space. That's what a confluence is in a financial market. So if you see like at the 20-day EMA, the 2-week high and the pivot point and some other stuff meet at one point, that's a price. That's a point you need to be watching. Confluence. That's where you need to watch that point because something's gonna happen. See, again in my book, PAT system, price action trading. I speak about this in depth. How you want to achieve confluence. Now, of course, in every trade, you're not gonna, especially a day trader. Honestly, as a day trader, I rarely get confluence. Actually, but when I swing trade, I get confluence a lot because I only look for those. I mean, I don't know. Day trading, I know me stop one. I do see some meeting points, but like I say, Forex is so fluid, you really don't need it for some currency pairs. But when you achieve confluence, man, those are really strong signals. Those are normally very profitable trades because you have so many indicators pointing in one direction that says buy or sell or what have you. So you should always go with that. So again, when you when you people always ask me, like I say, when to buy, when to sell, you gotta learn your indicators, people. You have to. At the end of the day, I could be dead wrong. And if I say yo, buy at this point, you're gonna be wrong too. You're gonna be mad at me. And I'm like, why are you mad at me for? You should learn yourself. I don't think it was funny. So like, you're dealing with your money, folks. I mean, I understand. It's never wrong to ask no one. There's never wrong. Please don't hesitate to ask me. Please don't, because anyone to tell you, I'm quick to respond back, give you an answer, and try to help you out. And at that same token, though, I always say, man, you should probably try to learn yourself too. I don't want them to take me the wrong way, kind of talk down to them, but it's always better to just know, because, like I say, you don't want to follow no one else and run into a wall. Then you're going to be mad at that person, and you should be mad at yourself because you followed someone else. When the knowledge is free, because I keep saying, when I started this, man, there was no Facebook groups, so many trading. I'll be jealous, like, man, there's all kind of knowledge and files and free stuff. It wasn't like that. Everything costs. There was nothing free. So I said I could either pay all these trading courses or just pay money in the market, paying blood, like just trade and not know nothing. I took that route. I didn't want to pay all these courses, pay 500 to this dude and 1,000 to them, rather just put 5,000 in the market and just take my lumps with my money. But nowadays, people, there's so much free stuff out there. Google, YouTube. I mean, me, Trader God. That was a plug for me right there. You know what I mean? Like, still though, honestly though, seriously though, so much free stuff, man. You guys can, it's just you gotta want it. Me and someone were having this discussion today. Like, I could, all right, not me specifically, but I'm just saying a person could tell you a million times how to do something. Until you physically do it yourself, it's just not gonna click. And that's why I came up. That's why I brought you up the forex thing. To see how to give you a layout how it looks. See the underlays of the chart, the overlays that goes on the chart. Talk about the different indicators. And I hope if anyone saw this, you might go check out the book now that I'm pounding in your head and say, oh, that's what he was talking about. So like you see on my chart, I have my exact trading style that I write about. That's the style I trade. Like I literally do that. Now, that PAT system, it was really written for Forex and crypto. Now, it could be achieved in stocks, but see, stocks is just not they don't have the liquidity. Honestly, stocks is like the slowest, most worst. I mean, it's the most consistent, but in terms of like day trading making profit, it's not as comparable to Forex. It's not, like I say, $5.3 trillion a day. Stocks in America is like what? NASDAQ and NYC combined is like 50 billion. Let's say 100 billion combined. Those are the two biggest in the world. So you see 5.3 trillion to 100 billion. It's not really of a comparison, really. So therefore, Forex is the market to be if you want more trading opportunities and you want more time to trade because it's 24/5. And now they got crypto on Forex exchanges. It now becomes 24/7. And eventually, once they start mixing this up, they're going to start making the dollars, the Forex currency, the natural Forex currency pairs are going to start following the crypto pairs and becoming 24/7. They're going to make this a full 24/7 thing. You can see this coming a mile away. So the thing with that is there's going to be so many more opportunities to trade. So those that work 9 to 4:30 or 8 to 5, work during the stock market is open, it would behoove you. As military terms again. I know when I heard behoove, I always had to do like 100 push-ups after I heard that word, or like 100 crunches or something, leg lifts, or run like 10 miles. But it would behoove you to learn other markets how to trade, because if you work 8 to 5, 9 to 4, you can't really concentrate on stocks. You can, but you're doing at your job and you're looking at your phone and this and that. Whereas after work, getting the market like Forex is 24/5, crypto is 24/7. You can just practice on your own in your house. That's why I tell people, get these practice accounts. Like, I don't understand. No, I'm sorry. But people, you should just get the practice accounts. There's so many. I don't know if Prime XBT has a practice account actually. I actually came here just to trade, do my Bitcoin. But you got Owanda. That's when I used to trade Forex at OANDA.com before I learned about Prime XBT. Now I just do it here. But Owanda, they give you a practice account. People, you go in there after work, you get home, eat your little dinner at night, practice trade for like an hour. See, you don't want to see the thing when you practice, people, it's not necessarily to get the profit immediately. It's to learn how the market works. You gotta understand the money's gonna be there. Like I just said, that same chart pattern I looked at where I thought I knew everything, somebody was doing it back in the 70s. They were doing it back in the 40s. They were doing it back in the 30s. These charts are always gonna stay the same, which means the money's always gonna be the same. So don't rush to make the money, but you want to rush to know what you're doing. You know, that was hot. That was some stuff I want to put in a book. I'll put that up in my next book. Don't rush to make the money, but rush to know what you do. On that note, Mr. Trader die. But nah, but seriously though, people, you just want to know what you know what you're doing, and don't be in a rush to make the money because if you don't know what you're doing, you won't make money. You're gonna lose money. So it's always good to shadow. That's what it's called, shadow. I did that when I first started, believe it or not. I shadowed people, but not necessarily. I just I would read like what such and such trader would do. Like the Reminiscence of a Stock Operator by Jesse Livermore or Larry Livermore, because you know that was his alias. He had like 2, 3 names. Anyway, I read his book, and that's how I learned how to trade actually by reading books like that and doing my own thing. So it's never bad to shadow people, but it's always better to learn your own style. And that's in everything in life actually, but especially with investing, man, because you're dealing with money, your money, you know. So yeah, man, you want to just learn your own style. And like I say, that's why I started introducing people to stocks, because I always say multiple times, these technical analysis things that I'm telling you, you can use in every single market. So it would stand to reason that if these technical terms go through every market, if I master these technical terms, I would be good in any market. That stands to reason, and that would be a true fact, honestly. It would be true. So and I know people, yeah, you want to check out that book, man, Price Action Trading. It's only 10 pages. Actually, I think it's like 8 pages of actual writing. And if you know, I got the bibliography page and the introduction. I think it's like 8 pages of actual text front and back. It's really simple read. You know, that's more of a day trade and swing trading style. If you're a long-term trader, you can use that same style, but you just got to tweak it. Mine's strictly for short-term swing. But yeah, people, you might want to just get your own styles, learn. Don't be afraid to take lumps. That's what it is when you trade, and that's why they got these trading accounts. Because I'll be afraid to lose money. Do it with fake money. Figure out what works for you. And on that note, man, if you fall, get up, try it again. If you fall, get up and try it again. Train or die. Get up and try it again. Run is up. It's coming up. You ready for whatever's in front of us.